Okay, I think we are rolling. Good evening, world. I have been a bit quiet on YouTube for a bit, and a lot has happened personally and also on the charts, and that's what I'm here to discuss basically. For those who don't know, my name is Daniel Ogbe, and I'm a technical analyst. I study the market, study the charts, and basically do this in my spare time. I'm also a software engineer, and yeah, mobile apps, websites, web applications, server applications, all those. I should really take my time out to do a proper video on what I do and how we can make money together outside the charts. But without further ado, let's just kick into it, right? What I have with me is EURJPY, and my last video I spoke about this pair. I spoke about my positions and my game plan, basically, and we have done something quite interesting here. I'm going to be going over about four pairs at least, right? So stick around and you know you might get something. But of course, if you don't want to stick around, that's fine. This is strictly a trading journal for my personal growth as a technical analyst, right? So, what happened with EURJPY? I think I remember on my last video, you could go back for reference purposes. We had broken back down, we had broken below here for a lower low. As you can see here, the markings are still here. I haven't changed much. I haven't changed anything at all, really. And except add this red line here. And I'll get to why I added that in a bit. So what happened for EURJPY? I had my case properly mapped out. I had my sell orders here, this black bar, because there was a, okay, I think I removed a trend line here, and my basically it was a free play, and then I had my entries somewhere above this black bar. But then what happened, which is something I keep talking about, is what high to choose when drawing your Fibonacci. I used this one because I felt it was the immediate. However, the correct thing I should have done was this one here, which lines up really nice with where I eventually had a second position, because I had my first position here. SL came above here, right, somewhere above here. It was a big margin for stop losses, and I think that's what made me come back to, like, okay, wait, I think there's a better way to do this, right? And then I drew my fib level from the swing high here down to the swing low here, right? And that is when I got this entry. I still had my entries from here, mind you, but they were in view, like the loss was real. But we weren't stopped out just yet because our SL was, I think, shy away from somewhere around here, if not higher. But it was really large, right? Because I was really conservative on that particular entry. However, this was the latest entry I had for EURJPY, and I have pointed out why I had that entry. It was just a simple fib play, swing low, swing high, and then we got here. I had a pending order here as we were rallying up. Once we got triggered and we started moving into the negative, I came back. I had to draw this again, and I had my pending orders here with a much more aggressive stop loss. Is about 65 pips, right? Now we did trigger, right? And then we started heading back down, right? And all was good and fine when we got. Let me. Okay, you know what? Let me not hide it just yet. When we got to the black bar, I basically just broke even, so moved my stop loss break even, just not even taking it. Okay, I think I took a bit, just a tiny bit space to the downside, so that swap doesn't make it a negative. But I didn't have any intentions of, locking in profits at this point, at this black bar. I just was more focused on mitigating risk, right, and just eliminating risk in general. So I came when we were at this black bar, I basically broke even with the intention of letting my winners run, as traders like to famously say. So something interesting really happened to me on this EURJPY trade, and we proceeded with downward movement, right? We proceeded. It was nice. By the time we got here, I closed out about 60-50% of my positions, moved SL to this point, break even, and I was good. It was good. 2 sets of positions here, no risk, and I had banked, something. It wasn't as much as what I was seeing in total equity, but it was something, and I was good with that because I had my eyes on another entry that would come once we retraced for a lower high. Let me take that again. We got in here and then we started to tank downwards. And as we started to tank downwards, once we got to the black bar, I eliminated my risk, meaning I took my SL and put it just a bit past break even, so that I don't have the possibility of running to a loss for this one. I was still running loss for the first position, but that was fine because I knew we were about to get this going. How did I know? Look closely, you'll see we pushed up and then we had a bearish engulfing candle here. Let me hide this. This doesn't serve me anymore. Let me hide this so that you guys get the real gist. Right, so this was basically what happened. We started to tank, and when we got to the 100% retracement point, which was here, as I always like to, rule of thumb for me basically is close out at least 50% of your positions, which I did, combining my first entries with my second entries. Everything 50% was banked in the balance, not equity. It was banked in the balance. So this here, from this high to this low, was a success, right? However, we still had some positions here, right? And okay, something I should add. When closing out, I closed out majority of the positions from the first one. That's the one I had here. Majority of them from here, then this one a bit from here. And the reason was because this is basically just bad positioning. So the fact we actually pulled it off, I mean, why keep it, right? So when we got here, I just had to manage my trades properly, and because I think I already drew this guy here, that this guy was going to be a problem, right? And we had come to put in a lower, this is higher than this, right? This is lower, this is the lower low. So by the time we started to move a bit sideways, I was like, aha, we are, we are about to push in. My mindset was this: we have come in here, right? I have made not a lot of profits because I trade a small account, but I have made profit from here, right? I have closed out a percentage of my positions, and I have moved my SL past break even, right? Good. Now where my head was moving towards was a second or rather a third position, but I basically considered this one, like both here. This was just a case of bad positioning, and the reason why I say it's bad positioning, because I took this high to this low. This should not be the case. This should not be the case. This is bad. And this is what I would come and tell my trading journal, like this thing I did was wrong. It worked, but it was wrong. The ideal thing is to take the swing, the entire swing, not just an impulse leg in the swing. Again, take the entire thing and not just an impulse leg in the swing, right? So doing that, I then now realized that I was in a bad position here, but it worked. So moving on, right? So I closed out most of my positions from here. The ones that were here remaining here, I moved my SL to this red line here, and that's when I now added this red line, because I was like, okay, this is my new SL. If I should bring back that marking, the reason why I don't really move the SL on here, because the moment you can't really move this, right? So it doesn't make much sense again, right? So we got here and we started having some sideways movement, right? Now once we started moving to the upside, started doing like we want to retrace, what I just did was, now this is a no-brainer. From swing high to swing low, and then you see that it lines up perfectly with this black bar here. So I was like, this EJ is just B, right? So it was perfectly lined up. It was a no-brainer trade in quotes, or at least I thought it was. And I had my pending ordered on the green, on the 0.618 fib level, on it, not even below it, not on it, gerege like this, right? So that's where I had it. I had my I had every intention of stacking up on a winning trade for EJ, right? I had every intention to stack up on a winning trade for EJ, and that was what I was going to do, and I wasn't shying away from it, right? So what then now happened was, when we started to get here, I think it was last week Monday that happened. My SL was above here, above swing high, above this high here. So my SL came above here, somewhere here, and when we got triggered, it was looking like we were going to start heading down. And then first things first, we got stopped out for break even for our previous trade, and then I got stopped out for a loss for my new trade that I intended on stacking up on, right? So it was just mixed feelings at the end of the day. This from emotional aspect, or a mental aspect rather, and it was just mixed feelings for me, because I did make profit, but now in the process of trying to stack up, I had lost a percentage of that profit, which is fine, is the game, right? What did I do wrong? Aside this bad positioning here, I feel this worked fantastically. The fib level, I was getting triggered here, getting here, closing out some positions. In that regard, I feel I should have closed down more than I did because I trade a small account, right? So it's easy when my trading mentor, he would say, close out 50% of your positions. But he trades millions of dollars, right? I don't trade millions of dollars. So what I should have done once we got here was close out about 60, 70, even 80% of my positions. Yes, about 80% of my positions, and then the remaining give it some more profits. Like here, if we get stopped out, we get stopped out and we move, right? Give it, may it chop space, may it chop rice, right? Give it space, like take in space. This is what I should have done once we got here. 70-80% of my positions closed here and moving SL very, 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 very reasonably when it comes to taking in profits, or securing profits. There's no need me being conservative with securing profits when I'm trading a small account, right? Looking at it now, it doesn't make much sense, right? But that's what these videos are for. So we had this losing trade here, but we also had this winning trade here. So it was a case of it is what it is. I didn't trade for the rest of the week. That was last week, and that's why I didn't really drop anything. Another thing I want to speak on, I think another trade I took was GBPJPY. And GBPJPY basically just stopped me out for break even. I remember saying GBPJPY was basically looking bearish. However, we needed some reversal. You could check the last video to see what I said about GBPJPY. However, if you look closely, you see something of like a head and shoulder thing forming here. If you are a lower time frame trader, 30 minutes and the like, you would see this more profound. But what happened was then we had this bearish impulse here, and then we retraced. Now this black bar has been drawn, I don't know, I think it was even drawn, this is an inverse head and shoulder here, and this was the neckline. So the black bar is still acting as a key level here, right? So once we bounced off here, once we had a lower high here, I simply just got into the trade. My SL came above the bar, and it was a very quick trade. Once we got here, I did the same thing, closed out about 50-60% of my positions, moved SL because this was a very small space. I needed to now take in more profits in terms of adjusting SL. And then what happened, we basically just stopped me out for break even, right? And yeah, it is what it is. We could have even stopped me out for stop loss if I didn't do that, because look at where we are now, right? So it is what it is, and I'm not complaining. I'm just going over my last trading session, which was basically EJGJ, right? And yeah, this is what happened. I have no comments in terms of what I should have done for this, because, well, it is what it is. Trump inauguration, I know this is GBPJPY, but the Trump inauguration really made things a bit dicey in the market, right? So I'll show you what I mean by that. So we've done EJ. Moving forward, I'm not looking at EJ anytime soon. I would rather even look at GJ more than EJ, and well, it has to do something. It has to set well. This is not a good setup. Let me delete this. Let me sharp. It has to basically let me leave that line. It has to basically set well. It has to give a setup that is not just tradable, but you are seeing it crystal clear that okay, we are ready to move, right? And right now I'm not seeing that, so I won't be putting my money here, of course. GBPJPY, however, we can see if I delete. Let me delete this because I've explained. Delete this as well. Right, so we've seen this guy and then we've tanked, right? And we had a lower low, but it wasn't really that low, that lower than this low. So now what has happened is we've come in to put in a higher high than this. So it's now in a very funny situation at the moment. However, we are coming to this monthly level. If you notice, prior to now, let this thing load. Prior to now, we've been having ups and downs, right? Normal market conditions and behavior, right? Now we have pushed up, we've made sideways movements, and then we've rolled down. Now we didn't get here, but it's fine. Maybe one of the things I should consider, right? Now basically we have retraced back to this monthly level. It's still a 50-50. It's still a 50-50 move. I'm not exactly going to call anything for GBPJPY on this video, but it's a 50-50 move, and anything is still possible. You see, from swing high here to swing low here, you see that we are playing nicely in this area, right? That lines up with a monthly level. That lines up properly with a monthly level. My ideal scenario will be a counter trend line coming from here. A counter trend line. This is a lower high here, and then once we break, would now start looking at once we break this guy, we need to break this guy first. You understand? So once we break this guy, we can now start looking for selling opportunities to the downside from here till about here. That will be a proper lower low, lower than this. That's where I would want to be, right? But for now, it's still. I'll just leave this counter trend line here. In position you sharp. So I'll leave this counter trend line here to guide my future analysis, right? Now that's it for GJ. I'll just mark this and unmark this and adjust. So I'll come back, I'll circle back for GJ, but for now, this is Tuesday, 28th of January. I'm not exactly going to call any trades for now because I still feel it's premature, but it's worth having on your watch list. GBPJPY, a downside move. See all this guy. See from here to here, a lot of pips, a lot of space. Me, I like space. This is 1,200, so 1,200 pips potentially. Keyword potentially. So yeah, you should definitely have GBPJPY in your watch list. But the trades I would be looking at closely, I'll be close marking is the euro. Now, the euro is I remember saying that the euro, there was a, I think my last video, it was we're trading around this point or thereabouts. We're trading at a certain point, and I was like, the euro still needs to retrace some more, which we have, right? The euro has retraced to this monthly level and has touched this monthly level. Now, let me see if this is, nope. Now we have pulled into this monthly level, and then the monthly level is acting as a resistance for us. I think I've done a full top-down analysis on the EU, but let's just go over it again. This is the weekly level of we had this bearish impulse to the downside, right? Like just bleeding, right? And then now we pushed back up and now started ranging. This is a proper range here. If you map this out, this is a nice range, a nice exhaustion period from this impulse leg, right? Now, what interests me about EU is the fact that we have broken this range, hence committing to the downside. If we broke the top part, if we broke the resistance of the range and started heading lower, we would have committed to the upside. But we broke the support of the range, and then we are retesting this said support. So it shows that we are committing to the downside, right? That's one. Scaling now to a daily time frame, which is where all the the trend within the trend, as my mentor says. Sorry about that. Let me adjust my screen properly. So coming now down to the daily, you see that we've had this in the range, right? This is the range. Don't lose sight of the range. The range has, let me go to the weekly and mark the support of this range. Yeah, let's just mark this here and then go over to the daily and get started. Now, you see we have come in here to put in this lower high, because this is a high, this is a lower low, and then this is a lower high, right? And it looks like we want to close. I mean, this is 726. So if we close down here for a bearish engulfing candle, that would really just mean that, okay, we have broken the range. This is the support of the range, mind you. We have broken the range, and then we have now started retracing, and then the support of the range is now the resistance that is going to send this market to continue in its bearish movement. Now, for entries, I'm still waiting for certain things to come to light, because I don't like surprises in this game. I like to be fully aware of what's happening in this game. So I will tell you for free that we would be coming lower for the euro. For Euro USD, will definitely be moving to the downside. First level target will be the 100% retracement point here, and then eventually would come here. And I think why I marked this is a point I marked. If you look left, you see here is a key level here, and then we also have this guy here that acts as a somewhat a key level in its own right. and overall target is, well, 0.9800 basically, because I mean that's the closest round number, right? So not like the closest round number, but closest to sorry, had to take care of the fan and it doesn't mess up my recording. Right. So all right. Basically I would move this to 09800 because it's the closest round number to this level that I have marked. Hold on. Coordinates. Right. So from here to here is some goddamn. From here to here is some good space, and you see we even have a monthly level here. So this is we are just getting started, really, right? However, if we are talking entries, this is where my guy, the RSI, comes in. If we are talking entries, you would see that we are kind of we've had this bearish momentum, or just a bearish move to the downside. If you mark this guy here, see this guy, so this guy has been guiding the market on the lower time frame, on a 4-hour time frame. This is a 4-hour time frame. Oh shoot, this is a 4-hour time frame, by the way. Better. This is a 4-hour time frame, by the way. So if we are now committing to the downside, think about it. From a weekly and daily, we are saying we are committing to the downside. If we are committing to the downside, what should we expect? We should expect lower highs and lower lows. We've had this correction now to the support region, to the support, to the weekly support that is now acting as our resistance, and then we have tanked, right? I would ideally want to see some sort of higher low here and a pattern formation before we now start moving to the down. Let me draw this thing properly. Before we now start seeing, the actual move to the downside, right? If you go to a 1-hour time frame, which is where my entries go down, you would see the fib level is pointing up to the upside. The fib level is. So what would I do in this scenario? I personally would bring out my fib and have this swing high, swing low marking here. Now I know that, you see this dude here, this G. This is where I would want my orders to be. Now, hold on, just hold on. Okay. All right. Now, you see that from this is the peak, like this is the week, right? And this is also the week. So there is no higher, neither is there any lower point for my markings, right? So you see where we are on the fib, we're close to the oversold region, and to balance that out, I am anticipating us coming towards the overbought region. If we don't get to the overbought region, it's fine, but we'll be coming towards the overbought region. Yeah? Good. Now, what I would simply just do is have a pending order. Now, you guys know how I rock. I rock with pending orders, right? So I would have my pending orders here on the green line. Better safe than sorry, right? And have my SL above here. And have my SL well above this swing high. And with that, I mean, TP is the second. No, TP is even 9 here. But let's take this for now, right? This is about 400 pips, right? You're using 50 pips to take like 400 pips. So log this. Right, so this would be my ideal positioning for a sell, for a Euro USD sell trade. This will be my ideal positioning for a Euro USD sell trade. Would pull back in to this region, and then fingers crossed, but but I mean, this is the fib tool we are talking about here. Oftentimes we tend to obey it, and that's why I tend to use it oftentimes. So we pull in to here. My ideal scenario, we pull into here, we either range, have sideways movements or whatever, and then start pushing to the downside. Now, as I always say, this is not a financial advice. However, I would leave the coordinates of these markings just for a bit. Okay. Now, this is basically my EU setup. And I'm not exactly seeing anything that would mess this up. I mean, of course, if I would update my journal with whatever I see, but I do believe that we are ripe for a sell, especially bouncing off the support. Or this is the weekly support, by the way, that we marked on the weekly, right? So yeah, this is my EU setup. The conservative approach, however, would be, as you can see, this counter trend line is here. Hold on. As you can see, this counter trend line is here. So a conservative approach would be, to wait, for a break, retest of the trend line and back down. That would be a conservative approach, right? That would probably be my entry for my conservative fund. However, we ain't being conservative right now, you understand? So this is ideally my position for this, right? We retrace to this black bar, and then we continue heading down. That would give us the lower high for a lower low, along with my profits, of course. So yeah, this is Euro USD in a nutshell. One last notable mention is the GU. Now, of course, if you've been trading Forex for a bit, you would notice that the EU and the GU, they move similarly. Obviously, because of the USD factor in both of them, and they are both major currencies. We're talking about the euro and the British pound, right? Now, if I don't like to use correlations, say, okay, if EU is going down, that means it's a no-brainer, GU is going down. No. Let's look at the different setups, sorry about that. I thought my this thing was on DND. until tomorrow morning, please. So yeah, what was I saying? See why I don't like calls when I'm doing. Okay, yes. So I don't just like to bank my whole thing off correlations. I like to look at different chessboards and see how I can make the most out of them. All right. Now, just a quick one for GBPUSD. It's been. I remember saying that this monthly level, I was not comfortable trading it unless we retrace back up here, and then we might, we might have some selling opportunities and use here as a take profit point. We have retraced. It is looking like, I mean, this line has been here. If you check my last videos, you'll see this line, this particular line, right? So if you, let me see if I can draw some shit. Nope, doesn't work. But yeah, we have of course retraced, and this is obviously the high, this is the low. If we draw this, and voila, you see that we even line up here with the negative 0.27 fib level, which is usually profit region, especially for, okay, no, yeah, profit across all boards, even the, because if it's going to be the inverse, if it's a buy trade and you do swing low to swing high, you're still going to use this point as as your profit taking. So we have pushed, like the EU, we have pulled into this region, and it's looking like we are going to close for a bearish engulfing candle. I would be looking at this closely. Sorry about that. I'll be looking at this closely, but not like the EU, because again, I'm still skeptical of this guy. This monthly level that we haven't broken. We are still trading above, which is causing my skepticism. But like I mentioned earlier, we have retraced and we can easily use here for our TP points. But of course, I would scale lower. And when it comes to entries, you can use whatever entries you want. I'm still trying to refine mine. You see on here, I try different things, right? So I'm still trying to refine my entries. But once you get the direction of the market right, it's really, there's really very little anyone can do to stop you. So yeah, this is what I'm looking at. This is what I'm looking at, and this is basically what I'm looking at, and it's, sorry about that, guys. This is basically what I'm looking at, GBPUSD. You see this, we have this counter trend line. For this, I might actually just, wait for a break of this counter trend line and a retest, just because we are being conservative. And why am I being conservative? Because of this damn monthly level here, giving me the heebie-jeebies. So yeah, just to recap, I'm not trading GJ and EJ, but you could look at GJ in the coming days, weeks, and potentially you make a lot of money. My major priority is EU, and then maybe GU if GU fits into what I'm trying to trade. I would only trade my ideal setup. I will not take a my friends that trade, they call it a boya trade. So they say, this trade no work, oh, but boya make I just no, I don't I don't do that. So you see here on a 1 hour time frame, we are really slim here on talking about the RSI. Talking about the RSI, we are really slim here, but we have everything. We have every reason to push to the upside, and if that is the case, then what you should just do is just draw a fib level. Draw your fib from swing high to swing low here. Let me remove this one so it doesn't confuse me. What you do, draw your fib level from swing high to swing low here, and see the line even is in here. So, well, if we retrace here and then now start heading down, fantastic, right? If we just tank to the downside, I'm not exactly interested, unless we tank and then now start retracing. Then obviously I'll readjust where I use for my swing highs and my swing lows on a monthly, but it's basically the same game plan, right? So that's it for me. That's an update from my end, and take it easy, and wishing you all a profitable trading week and year ahead. Thank you. Take it easy.